Don't worry, guys. If you guys are busy, I know it's Monday, it's lunchtime currently. Some of you guys are at work. So this will be recorded as well. It will be dropped on my YouTube channel. I will send a link afterwards after I've uploaded it. And yeah, let's get started. Let's get started. And also, very important thing as well, what I want to say now, please make sure that you guys follow this series every Monday, because if you miss one session, you everything won't make sense. Because what you'll see, you guys will see, the way I'm doing this is I'm trying to tell you guys a story, shift perspective. There's also why I brought in the name of trading alchemy, because alchemy basically is the same as the alchemist turning lead into gold, same as the trader's pursuit for searching a profit, basically. So let's get started into it. So everyone, welcome. This is the first session. Let's get into it. Now, first of all, a disclaimer. As you guys know, trading involves risk, and you guys are responsible adults. Let's all make our own responsible decisions. Please know that all the views shared in this video or in this series is my views. None of these views reflect Volt. Everything here is the way I perceive it and what makes me understand the market. So you should take what I say here with a grain of salt, go back test it, and make your own responsible decisions. Okay, so let's get started. Logic versus emotion. Now, logic as your foundation. So basically, the whole idea behind trading is to do some research, and taking that research, implementing into technical analysis, and then basically also developing a risk management strategy from that, and then basing not only decisions on emotion, but on logic and data. That's very important. I'm not saying don't acknowledge your emotions, don't suppress them. Emotions like fear and greed are natural, it's normal, we are all human, but letting these emotions control your trades will lead to impulsive decisions. And some of these may be over trading, holding on to losses, not taking a profit. So recognize the presence, embrace them, and learn how to manage it. Because as a human, we can't ignore the fact that we will have emotions. Now, another important thing is stick to your trading plan. Discipline is very, very crucial. Once you've entered a trade based on your logic, avoid second guessing anything whenever you maybe see a pullback. Don't let that small emotion scare to you. You should trust into your analysis and also have predefined exit points. I always talk about this as a trader myself. Whenever I enter a trade and I see an opportunity, I always know where I want to get in, where I want to get out, and where I want to take my profit, basically. And the whole idea also with trading, and like I said, why I chose alchemy for the name of this, is because this is a process. Focus on the process and not the outcome. My mentor always told me, don't rush the journey, otherwise the journey is going to rush you. Okay, if I'm going too fast, please do stop me. Also keep in mind, this is my first time doing this, so I am also a bit shy. Okay, so mentalism. Everything takes place in the mind. I always talk about this. Everything takes place in the mind. Now, 90% of traders lose the capital due to lack of information, and this goes back to the mind, basically. What are you feeding your mind? What is your mind consuming? Is it good information? Is it bad information? And how is that information affecting your reality? Now, another thing also with mentalism is people think that there's an end-all be-all strategy, meaning a holy grail of strategies. There's no such thing as a magic strategy or the holy grail. So most traders build systems out of information found on Google. Now, what happens on Google? It's a collective consciousness, a hive mind. So be very, very careful of following the herd. Now, the market reacts from key levels or psychological levels. My mentor always told me the market is very psychological. And in my opinion as well, this is why I don't trust bots and EAs and indicators, because those things do not have emotions. And because the market is controlled, they have to play with your emotions, basically. So you have to be able to spot manipulation by being able to discern how the market is moving in that moment based on your data you've picked up when you've done your backtesting. Okay, so the only way you can change your reality is by changing your mind. So before we move forward on this, I want you to forget about everything you think you know about trading, because What I'm about to share with you is something that I haven't seen anyone share. And like I said before as well, this is purely from my research and things that I've studied that I want to bring across to you, because this is all also things that I've noticed majority of traders fail to spot. And this is what leads them into that death loop of doing the same thing over and over. Okay, so let's decode the market dynamics. What drives the market? We all know that the state of the economy is affected by inflation, interest rates, GDP, and major investors, and also geopolitical events, as well as monetary policy. But who controls the stock market? And this is a question we all should be asking ourselves. So the way I perceive it as well is the banks, the hedge funds, market makers, big institutions, liquidity providers, all the people who have, well, I would say anyone who has more than $1 billion, basically $1 billion, has an effect on how they can influence the market. So always think about it that way. So the market is also driven by energy. Now, energy cannot be created, nor can it be destroyed. However, energy can be manipulated. So this goes back to the whole concept of the market, basically. I want you guys to put this into perspective. People say that the market is random, but this is my thoughts. An economy wouldn't be stable, a company wouldn't be stable if it's based on random buying and selling. That means that the markets are not random, the markets are controlled, or how we would say regulated, and in order to keep them stable. But around these regulations is how these moves are formed, and this is the best way for them to actually have that control under them, basically. So also ask yourself this question: brokers profit by earning a commission or on the spread, right? That's how your broker makes money. Any broker makes money like that. But have you ever asked yourself, if you blow your account and the broker purely makes money on the spread or commission, how do you, if you blow your account, where's all the money go to? Even better question, if the broker only makes money on the spread or commission, if you make a lot of money, where's all money come from? It goes back to this interconnectedness of all the banks, basically. So as an individual, we should now understand that there is someone else behind the board watching what we do. And we call him the composite man, also known as the market maker. Like I said, big institutions, banks, and hedge funds. They oversee overflow in the market, meaning slow players don't stand a chance unless you know the secret, because you and I, we can't move the market. The broker can't move the market. Like I said now before, the market is energy. Only energy can be created. The same thing with money. Money is a spiritual element. So then they also have the ability to create moves, to create fake moves in the market, such as spikes. I'm sure all of you guys here, actually in the chat, let me know how many of you guys have ever seen a spike in the market when there's no news and you wonder what was the cause of this. In the chat, let me know who of you guys have ever experienced that. So for those of you guys who have, these fast moves are usually also caused by these institutions. Okay, so let's talk about the composite man's ideology. So I always talk about this as well. Your trading account means nothing to the broker or the market maker unless you press buy or sell. But the question is, before you can even press buy and sell, what's the reason for doing that? You have to be induced. How do they induce you? They have to show you some sort of pattern that you have studied in time. Meaning, I'm pretty sure all of us here as well. Let's quickly look at it in this perspective. Majority of traders lose money, but why is that? When you started your journey in trading, what did you do? I'm pretty sure majority of you went to Google and search how to trade Forex. And what happens when you search on Google how to trade Forex? You get all these patterns, strategies, and so forth. So ask yourself this question: if everyone loses money, why would you be studying that same information? And this goes back to how we get induced. So they have to induce you. Once you've been induced and pressed by and you've pressed buy and sell, you are now exposed to the market. You are now exposed financially. So once you've been induced, their job is to trap you. Meaning, if you see something like this is also why I say, like, why I spoke about emotions and logic. You shouldn't let your emotions get the best of you. The most logical decision always is to wait for the best trading opportunity. What I mean by this, let's say you see the market do something like this. We have a high, a low, a high, a high, a higher low. Then suddenly you see a candle that moves up like this. This isn't the best drawing, please forgive me. But let's say this is your candle and you decide, oh, I'm going to buy it because the market has broken above this high. It has moved so quickly. I don't want to miss out on this. Whenever you hear yourself telling yourself, I don't want to miss out on this, I would stay out of the market, because that means that you now feel rushed basically to enter into a trade. Let me just quickly get to the chat. Christopher says he always wondered what the cause of those spikes when there are no news events. And this is a good example. Like, we can't control the market. So for instance, the market will do, I always say the market will do whatever it wants to do in order for them to reach their price targets and limits. And this also goes back to as well the psychological levels. What I've also noticed is with a lot of traders is, it's not that they don't know how to trade, but they trade at the wrong times and they trade at the wrong levels. So that is two things you have to always keep in mind. What I also mean by that is, say for instance, so you guys know what the graph, we always have price on the right, and then we always have your time ribbon at the bottom. So what you want to actually happen is, wherever price is trading at, more or less, sorry, I'm just looking for my pin quickly. So let's say, for instance, there's a level over here. But for instance, based on, okay, we'll cover trading sessions now in a second. And that, for instance, at 10 o'clock over here, when price reaches that level at 10, price will reverse. But now let's say the market is still trading at this level and market is holding. Now, if you are impatient and you're going to enter that position that you want to take here, this is what I mean by that impatience. So now you go into that trade at the wrong level at the wrong time, just because you are forced, just because you can't control your emotions. Time and price has to meet at the same place for that trade to become valid. So also, once again, I will share something with you once again here as well that is not really spoken about. And like I said, this is purely my own views, my own research, and things that I have put into my charts that make sense to me. So for instance, brokers use clearing houses. Let's look at it from a bigger perspective. If you travel internationally, when you go exchange your funds, it's not like you guys are sitting there and you look at the exchange rate and you're like, oh, the market's moving. There's always a fixed range for a certain amount of time. So also, for instance, banks, let's say I want to send money overseas. Instead of the bank sending the money, paying a fee, you sending money, paying a fee, what they'll do is they'll collect all of our fees that we want to send, compile them into one, and then send it out at once, meaning that they pay one fee. So this is obviously saving on costs, basically. But think about it this way as well. The more money there is in the market will shift the market up. If the money is removed from the economy, the market will go down. So imagine this. A lot of South Africans want to send money to America. We send thousands of USD. So once that clearinghouse sends that money and it is injected into the market, this is how you also have fast moves happening, even when there's no news events. And mind you, transactions take place every single day. So these trading timings are also valid every single day. But we'll also cover this in the future. Okay, let's go back to this. So once you've been induced into a trade, you are now either in the position to buy or sell. The market maker's job then is to trap you. Once you are trapped, meaning holding a loss, then this goes back to this as well. The broker makes money on the spread or commission. The market maker, the people in power, they make money by hitting your stop losses, meaning their whole job is to hunt stop losses. Because if you lose money, always think about it this way: whenever someone loses money, someone makes money. But who's our enemy? The market, right? So if you lose money, that means the market makes money. That means if you make money, you're taking money from the market. So their whole job is to bank a profit by hitting your stop loss, basically. And that is the whole ideology of the composite man. The composite man banks a profit every time you hit a stop loss. Now, here's some common patterns I'm sure you guys would know. In the chat, once again, let me know how many of you guys have seen these patterns on Google. Consolidation with the breakout and retest. Let me do this. Here we can see consolidation over here with the breakout and retest. This is the opposite. So on top over here is where you'll have, okay, I'm wrong. So you'll have two types of setups, one for a buy, one for a sell. Okay. These are all the setups. Fanny Keegan, Akinas mentioned this. It's all over Google. This goes back to as well. Why would you be trading something everyone else is trading? I mean, if you go on Google and you search how to trade Forex, they show you where to enter. They show you where to place your stop losses. Now, have you also asked yourself, who has put this information out there for you to study? Because if you think about it, if you can control the stock market and if you have so much money, basically, you also have the ability to control information. So what would I do? I give you all the wrong information. I always make this example. Say you and I, we stand across each other, or there's a table in front of us, and I draw a 6. You will see a 6, but I will see a 9. And this goes back to perspective, changing your perspective as to how you start perceiving the market. And this is why my methodology is completely different to anyone that I know that trades, basically, because I perceive the market in a different way. And also, I'm not saying these patterns don't work. I'm not saying that. I know a lot of people who trade some of these patterns and they are successful. It's just not my cup of tea. When I did this, it didn't work for me. So the reason why I'm also conveying this message through to you guys, this is something you do, it's not working for you. Maybe just change perspective, you know? Okay, so Christopher says when you started, he literally started saving some of these images. Yeah. I mean, we've all been there. We've all been there. And that's also why I'm into people, because I've experienced most of these things. And yes, I'm young, but I have a lot of experience behind me in this game. So moving forward, we can see on all these patterns, you can see that if price consolidates, basically, they teach you that if price breaks below this level, a potential sell will take place on that retest. The same thing over here. If price breaks above, you can potentially look for buys above that level. Same thing with M's and W's, or double tops, double bottoms. They will teach you that, I forgot, I actually see as an area, I didn't add stop loss. So all the green points indicate where you should enter. All the red points indicate where you should exit, or your stop loss should be, basically. This is all information based on Google. But think about it this way. If everyone studies these patterns, they show you where to put your stop losses. Why do you think all of them lose money? Because they are literally exposed. So we're going to take this information, dissect it, and take it even further to the point and see how we can use this to our advantage when most traders are stopped out of the market, or when we see them taking the wrong positions. Lance, all good, man. I'll see you for the next one. Okay, so moving forward, let me quickly just erase this. So the composite man's methodology, this is how it works. It works in 3 sessions. Okay, now quickly, I also want to quickly share something with you guys, and we'll get back to this in a second. If you go to Google and search Forex sessions, and you come to images, let's look for South African time. Okay, so you'll see over here, London session says, they state that it starts at 8 o'clock. Now remember as well, information. It's easy to give someone the wrong information to have them exposed at the wrong times. For instance, what did I say earlier? Trading at the wrong level, trading at the wrong time. So let's cover timing quickly. Timing is very important. This is why your sessions are very important. They teach us that lunch starts at 8 o'clock in the morning, AM, up until 3 p.m., which is reasonable. It actually ends at 6 p.m. But then New York session starts at 1 o'clock on here, but it actually starts at 3 o'clock. See what I mean there? 2 hours of the wrong timing. Then you're also taught about Sydney session, which I don't count as a session, because Sydney and Tokyo session falls in line with the same thing. Now you might ask, but Jevon, how is Sydney and Tokyo the exact same thing? Okay, let's look at the world map. I hope what I'm sharing with you guys, it just shows you guys how deep trading actually is, and there's more to this market than just the money. Okay, so let's look at the world map real quick. So think of the sun and moon. Okay, the sun and moon. What's happening here? Sorry, let me just try it again. Okay, so let's look at the world map. Think of the sun and moon, okay? And this is how I will prove to you how these sessions actually work. So think of the world, think of the sun and moon. They are opposites, right? So if let's say the sun is currently, let's say the sun is over here, that means the moon must be opposite, right? Now imagine the sun moves around like this. That means the moon moves around like that. Over here is where we have Asia. Over here is where we have Sydney. So think of the sun and moon. This, if you look at the session timings, the sun and moon, when it crosses over Sydney into Asia, that is technically your Asian session, because that's when we are asleep over here, and that's when we are asleep over here, and asleep over here, sleep over here. So think about it in this sense. We're in Asian session, the people are working over there. Also think about it this way. The market moves 24/5. As humans, we can only work a certain amount of time. We can only work 8 hours a day. So how will you control the market for 24 hours a day if you only individual? Simple. You dedicate certain people in certain time zones for a different objective. Think of it as working shifts. Okay. So Asian session, when the Asian, okay, not when the Asians are awake, when the Asian market, or when it's daytime in Asia, it will kind of be daytime in Australia as well. Now, when it's daytime over there, their markets are alive. Their shops are open. Their companies are operating. Their economy is working, basically. So, okay, let's say nighttime comes. What happens then? They have to then shift to Europe. The sun and moon will move up until Europe. This is how London session then begins, because then the London market awakens. And over time, as the sun moves on, New York session will start, and we are right here in the middle as South Africans. Isn't that cool? So we don't actually have to trade Asian session, because literally, okay, we'll cover that in a second as well. But I hope this is something interesting, which I also said I haven't seen anyone ever talk about something like that. Okay, so let's get back into the alchemy. So the composite man. The Asian session sets the initial high and low of the day. The session also builds up liquidity, known as a consolidation phase. And this takes place between 12 o'clock and 8 o'clock in the morning, South African time. If there's anyone in the chat that is not from South Africa, all times here is South African time. Okay, so what I mean by this as well is, even if the Asian session does something like this, even if Asia does something like this, and the zone is that big compared to a consolidation that is this small, even if it's that big, I will consider that consolidation, because there's a certain rule I attach to my Asian session, which is, like I mentioned now, the Asian session sits at the initial high and low of the day, and this also is also set to build up liquidity. I'll cover Asian session in a second, and you'll see exactly what I mean by this. So the Asian market maker, the Asian composite man, he only has one job. His job is to accumulate orders throughout the night, because think of it as a business. If your job is to hit stop losses, and if you scare everyone today, no one's going to trade tomorrow. So what are you going to do? You'll end the day with a fake move, trapping people long and short. Then you'll take it even further and have price consolidate, because there's people who scalp the market. That scalping will eventually lead to greed, and they will keep on holding their positions, basically. But okay, I want to get to the chart so we can actually get to that. So London session will create a breakout, triggering stop losses and limit orders. This breakout sets the foundation for the fake move beginning of the day, and this is when they will break above the Asian high or low. And this takes place at 9 o'clock in the morning up until 6 at night. Now, don't get confused. Up until 6, we only look at 9 till 11:30. That is our kill zone. So New York session will then either continue London's trend or form a reversal at the high or low of the day. And this takes place at 3 o'clock up until 11 o'clock South African time. Like I said, once again, the composite man's job is to hunt your stop loss. Okay, chat. Before I move any further, any questions from your side? Any questions you have, feel free to drop it in the chat. I do see it. So if there's anything, I will stop. I will answer you. So don't feel shy. And I know there's other people as well, but remember, there's no such thing as a dumb question. Your question might just help someone else as well. Okay. So this is a typical day, more or less. So you have one of 2 days. Well, one of 3 actually. It's either that entire day price will consolidate, which is very rare. Then you will either have price form a New York continuation, or you will have a reversal basically. Now this is the first pattern we will see, which is basically price, like I explained, your Asian session always takes place between 12 and 8. Okay. Once you have that set, price will set initial high and low of the day. Now blue, I always use blue for my Asian session. Okay. That Asian session sets the high and low of the day. London session will come at 9 o'clock. You will have a breakout. This breakout will form the fake move beginning of day. And this is also what everyone will be chasing in the market. So what happens is, let's say for instance, there's something called breakout traders. So what happens is, if price consolidates, you have support and resistance. So if price breaks above the resistance, that resistance will now become support, where price will continue. This is exactly what's happening over here, basically. This is how you get induced into taking a position high or low. Because also think about it. If price has been consolidating and now you suddenly have a breakout candle, you will now perceive it as volume. Okay. Once you have that set, then we have another option, which is the New York reversal. Now, New York reversal, very similar concept. Like I said, Asian session, same times, every single time, set the high and low of the day. You have your breakout. Everyone is now buying the market. So now with everyone buying, they wait for their retest. What happens? They have stop losses below this level, below the Asian high, and like stop losses below the Asian low. Your potential trade that will then take place will be then here at the New York reversal. So also through studying it from my data, you will either be able to form a you'll either be able to take the trade in London from here, or to trade in New York from here. Or alternatively, if it's a continuation pattern, you will have to take the position then based on the continuation from this level. And only this test in here is what will confirm whether this actually holds. But don't worry, we will go deeper into it. I know it might seem complex, but once you have a true understanding of why I perceive it this way, it will make so much more sense. Okay. So let's quickly talk about this. Let's start off session by session and let's break down why it happens the way it happens. So Asian session will start and price will consolidate from 12 up until 8. Remember, if you have the lack of this information, you won't see it this way. What will happen is the market will slow down, price will consolidate. People who scalp the market will now be taking buys at the low of support, buy support, buy support. People will sell the resistance, sell resistance, sell resistance. What happens now? Below support, there is stop losses. And above resistance, there is stop losses. Okay? Does that make sense? After this has happened, price will basically consolidate. And like I said, this is a rule you implement from your Asian session. You always wait until 9 o'clock. Sorry, so Earl's asking, would market structure be the best judge of whether it's a stop hunt or an actual move when there's confirmation of a trend? So I would say yes, market structure is your best friend. Market structure will be able to determine whether it's a reversal or whether it's a fake out. So actually on that, let me quickly show you guys something. We'll get back to this in a second. Let me quickly look for a point in time where we have a wick. So market structure. Let me quickly show you. Where's a good example of a wick? Okay, here's one. I want you to take note of this section of the chart, this over here. Notice this. If I put it on a line chart, there's no wick. So the line chart is your friend because, say now, for instance, you are trading, right? I don't know how some people perceive the market, but some people might maybe see this as a resistance, and our price is broken above that, and that is support. Okay. Or we can even do it something. Like I said, I don't know how people do it. I don't trade support and resistance in that sense. So for instance, the best way to see whether it's still in a downtrend is if you put in a line chart and you can see lower lows being formed. As you know, in a downtrend, high, low, higher low, lower low, lower high, lower low, lower high, lower low. So if this is lower low, we should expect price to form a pullback, to form a lower high, to move into a lower low. And only when price changes character, we can now determine moving into an uptrend, basically. Does that answer your question? Does answer your question? Okay, so then moving forward on that, now we discuss the support and resistance side of this. Okay, you're welcome, all. So now that we discussed that, now let's actually distinguish or discern like why this actually happens the way it happens. So what actually happens is, like I said, you have your consolidation. That means there's also some people who wait for breakouts. That means there's people in this trade. There's some people buying, some people selling. They both think they're smart. There's then some people who would place buy stops. They will place buy stops above the level, stop losses below the Asian highs, stop losses below the Asian lows. There's some people who would place sell stops, stop losses above the Asian highs and above the Asian lows, basically. Now that we can already perceive the market in that sense, we can already see that there's a lot of volume in the market every single morning before the day even starts. A lot of trapped volume, and all of them think that they're smart. So once this happens, now remember also, we can't see the other side of the board. And what do I mean by that? If you hit a stop loss, you obviously have a risk to it, right? Now, if your risk is, say your risk is $10. If the next person's risk is $100, if you accumulate all the stop losses for the sales, for instance, you might end up with X number. All the stop losses for another number, X number, right? Now, let's say, for instance, like I said, we can't see the other side of the board. This is why I don't trade Asian session. I wait for the composite man to show me his hand and what he wants to do. Now, also, be mindful that the composite man makes a fake move beginning of session, end of session, beginning of day, end of day, beginning of week, end of week, beginning of month, end of month, beginning of quarter, end of quarter, beginning of year, end of year. DG, sadly, you have to run for school. Don't worry. It will be recorded and will be sent out to my YouTube as well, so you can still watch it afterwards. Okay, so we can't see the other side of the board, like I mentioned. So we have to wait for the market maker or for the composite man to show us his hand. And what's the best way to do that? For him to hunt the stops. Because think about it this way, say for instance, you are the composite man, right? Think about it that's in that sense. You would target the most amount of stop losses, right? Now, let's say for instance, here on top was 30 billion worth of stop losses, down yet only 10 billion. What happens now? The most amount of stops, wherever the composite man can make the most amount of money, that's where he will go. Now, like I said, imagine up here was all these stop losses. Say all of the stop losses. What actually happens now is they hit these stop losses, but now what happens? They've now created volume. Because now people will see there is this volume candle basically coming through. Now everyone will be chasing that move towards the upside. Now, if everyone is now buying the market, why would you be buying with them if majority of people lose money? So what I would then do is look for the reversal, or look what will happen next. And what I mean by that is the people who, for instance, sold, their stop losses were hit. Now the market is bullish. It's broken above resistance. Clearly, they were on the wrong side of the market. What's going to happen now? Let's say there was 30 billion worth of stop losses up here. They've just wiped off 30 billion off the board. What happens now? The people who are on the wrong side, they will recommit funds because they don't want to miss out. FOMO, emotion. Let's say 10 billion worth of those people recommit their funds and they take buy positions. Yeah. Let's say that they take buy positions at that circle. What happens now? This is support. They have to place stop losses below the support. But now as a market maker and thinking like a composite man, what do you think is going to happen? The market will now basically reverse and hit for those stop losses because this is untested. And this is how I find my trades basically. So basically what I do is if price breaks above my Asian session, I look for sells. If it breaks below my Asian session, I look for buys. Very, very simple. So let's take it a bit further. So like I said over here, you will have one of two things happen. Either, let's quickly go back to our session. You'll either have a New York continuation or you will have reversal. So in a case like this, if the stops I hit, this is what happened. Now those stops I hit and those sells were activated, and now the market will pull back to the opposite direction. So the composite man will do this every single day. Hit the stops high and low every single day, basically. Now, this is your cheat sheet, okay? If this is your structure, so on the left side, everything over here, this is your structure for an uptrend, this is your structure for a downtrend. So if you're on an uptrend and this is your Asian session and price consolidates, if you are bullish, you know that we expect price to form a low in order for us to form that new high, because we know that we can have a fake move beginning of day, fake move end of day. So meaning if I'm looking for buys, I want to see a stop hand low rise. If I'm selling, I want to see a stop hand rise drop. So that is very, very simple. This is your cheat sheet. Then moving further, you will have one of three setups. So if you're buying, you will have one of these three setups. Sorry, if you're selling, you will have one of these setups where price will break above the Asian highs, and then you will drop, or price will break below that level, and the 50%, the equilibrium of Asia, will then act as your sells. And then also another potential is you will have Asian highs hold, and you can then take the setup like that. Alternatively, for buys, it's just the opposite. You have the Asian lows hold, the 50% hold, break below, and rise. Personally, the first one here on top, this is my favorite setups. These over here. These are my favorite two setups. Okay, now let's do some practical. I'm guessing you guys are itching to actually see this happen on a real chart. Before we move further as well, any questions from your side, guys? Let me know if there's anything I'm going too fast with. Okay, let's look at the day. And just to also give you guys perspective, I'm still waiting for someone to be as consistent with their method like I am. See a lot of mentors and guys who teach, who change their methodologies up every year. I've been using this since 2018. Since 2018, for the last 6 years, this has been tested. It happens every single day. So it's not like I went back and went to go cherry pick what I'm about to show you guys on GBP USD. I literally just went back to last week. You guys would see that this is the current week. This is the new week. This is literally just last week. This happened last week. So literally you can go back and see how this happens every single week on every single pair. Anything that moves in the market has a composite, man, and it will be, and it will be taken on the exact same rules because everyone trades the exact same way. Okay, so a very important thing for you to understand now here as a trader is you must time map the market. And this is what helps me understand it better, because instead of trying to study a whole year's data in one, break it down in smaller time frames. Because if you think about it as humans, this is why it's called alchemy. This is why, like, I'm trying to put this message across to you guys. It's like I'm trying to show you that you are in control of your reality. It's just how you perceive your reality that has an effect on the results you get. So maybe if you're not happy with the results you're getting, change your perspective. Okay. Now you can say over here is Monday. So very important as well. Remember what I explained about the Asian session? They will always sweep the highs and lows. That concept of sweeping highs and lows can be applied for the session, the day, the week, the month, the quarter, and the year. So you see over here, here's our Asian session. Very simple. What you do is you put it on a box and you map it from 12 o'clock up until 8 o'clock. There I have my Asian session. And you must always make sure that your time ribbon at the bottom always lines up with your time zone. So as you can see, I'm on Johannesburg +2 because we are South African time. So let's quickly look at our setups. Remember what we explained? Asian session, price takes above the high, above the box, we look for sells, below we look for buys. And you will have one of three setups. Now remember, our one of the setups is either a break above like that, or a break below 50%, or the Asian highs and lows. Here you can see we have a type 1. Type 1 meaning we're at price break above the Asian highs and then form the reaction for us to look for sells, basically. Now, a quick example on this, like how we can perceive it, is Asian highs is over here. It acts as resistance. Confluence, how I would have even perceived it. I have a break above. That means I'm looking for sells. Price comes back below the Asian. As you can see, notice how price comes to the Asian. Let me actually take it in like this. Notice this. Notice this first candle, how price taps it. And then price rejects. Price comes again, the next candle rejects. The next candle breaks through. The next one tests it. And there we have the move for the retest. This is that move where everyone is now buying. But now look what happens. Price comes back here and it now tests that level and it rejects. It tests again and it rejects. Then it breaks through. Notice when price comes back to the level how it rejects and holds. And there's your sell basically. And there's how I would have taken that sell, for instance. So there you can see, notice once again how the Asian lows also play a role as support. Notice when price came to this level, how price just tested it first and then rejected. And then only price broke through. And you'll see if you take it even further, it took a while for price to basically get into that. And once again, let's quickly look at what we discussed as well. You will either have a continuation or a reversal. And also, let's quickly look at it from another perspective. Fake moves. The session starts off trading down. That means everyone is now selling. Then we have the session trade 1, 2, 3. 3 psychological hits to the upside, bullish. End of session, market trades down. Why do we have a fake move beginning of session, fake move end of session? Accumulation, manipulation, distribution. Same thing for London. Fake move beginning of session, price trades up and moves down all session. Fake move beginning of session, distribution. Same thing, accumulation, manipulation, distribution. We see again, New York session comes in. You can either see it as a continuation or reversal because both happened. 3 o'clock, price continued with the trend to the downside. And exactly at 5:15, price has reversed. Now, in the case like this as well, notice beginning of session, price trades down, then trades up. And notice end of the day, when price trades all the way up before the end of the day, how price then pulls back down, trapping people. So people who bought it now got trapped. Okay, so this is literally how you map out an entire day. Let me just see the comments. Would it be safe to say that liquidity sweeps that lead to market shifts occur in crossover times? Confirm direction will mostly happen in session. Say you execute and the market shifts are taking an equal high speed. Yeah, so basically, okay, liquidity sweeps lead to market shifts, yes, because okay, good example. Oh, notice if this is Monday, this means that this over here is Monday's high. Notice how Monday's high, first Asian session. Remember, we can't see anything on the left. How it swept the Asian high and dropped, swept the Asian low, and then basically went up. So notice this again, how price left the high of the day at this level. And notice how Asian session came and it swept that. However, it was out of session over here. Do you see that? Oh, it's out of session. But to understand one thing, the market will do whatever it has to do based on what the composite man needs. This goes back to, we can't like say it has to move at this time. We can have an idea of when it can happen, but this is why we must have fixed rules, for instance, like our times and so forth, if that makes sense. And also, you say that, let's say you're executing the market shifts after taking an equal high. I'm having a bit of trouble understanding your question. But I will get back to that in a second. Let's quickly run through this again. So we can see that Monday's high has been swept. Now we also had a low set for the week. Now remember that this is only Monday. Now we have a high of the week and a low of the week. We can now see Asian session comes, Asian session sweeps that high. Now that's our Asian liquidity now. Notice what happens now the next day. This also goes back to how you won't have a setup every single day, because notice this. Dominant session comes in, it breaks below, but there's no setup that forms. So for instance, same thing can be applied here. Fake move up, then price moves 1, 2, 3 levels down, psychological. Sorry, then we have the reversal. So from there on, notice again how that low was swept. Now on a day like this, I wouldn't have taken a position. But however, now that I know that the low has been taken, I now have my low of the week set, and I have my new high of the week set. So for instance, knowing that price has come back into the range of the week, I could still be bullish potentially on the SPY, but now I have to wait. So the next day we see Asian session come. What happens? We have a break below. Perfect example of what we refer to over here, the type 1 pattern on the top right. Price breaks below the session. What happens once again? We have price trade down, beginning of session, trade up, forming a double bottom, and there we rise. Now, why I would have been bullish on this is the fact that our Asian highs were untested, and yesterday's Asian high was untested. So in a case like this, I'll be looking for entry around this area, stop below the high, stop below the low of the day. First TP would be at the Asian high, second TP at yesterday's Asian high. There you can see that would have been a potential 1-to-5 risk to reward ratio. And same thing once again, notice how price trades up, fake move beginning of session New York, and then suddenly market just has a reversal and just straight drops. And then once again, now we can see that this is now also the low of the day. Or we can even take it even further. You can see that it's still our low of the week. Notice how that low was swept once again. And actually a very interesting pattern occurred on GU last week. So if you look at each day became more and more volatile. So you'll see that the first day, the market only moved a total of 56 pips. The next day, the market moved a total of 81 pips. The next day, the market moved a total of 93 pips. The next day, the market moved a total of 131 pips. The next day, the market moved literally 157 pips. So also interesting how each day the market became more and more volatile. And once again, notice how this low was swept, price left a new low, and how that low was swept again on Friday. Fake move end of the week. What happens is that low there will be stop losses here for buyers, and there'll also be sell stops for sellers. And notice how they were activated, stops were hit. Over here as well, notice how the highs were swept here. And notice again how the highs were swept over here. And every single time you find your setup, it's either a sweep and then you have your pattern that occurs basically. This is by far one of the easiest methods you can use to perceive the market. Like I said, the most consistent thing I've ever seen. I would say go look at this on your own, go back test it, do your own research on it. Then you'll be able to base your own decisions from that. Let me quickly go back to the chat once again. Okay, guys, so that is pretty much it for our session, eh? This was day one. I didn't want to go overboard with everything immediately. Like I said, also don't miss out on your sessions every Monday because it's going to get more exciting. It's going to get more fun. I'm going to implement more knowledge, more perspectives as to how you can perceive the market, because that is literally like the only thing you have to do to start changing up your trading strategy. But yeah, guys, you're welcome, man. You're welcome. I'm glad you guys enjoyed it. If you guys don't mind, please send me a review on WhatsApp, what you guys thought about the session. I would really, really appreciate that. I would know what I need to work on as